What is S&P 500 and should you invest in it? You've probably heard the term S&P 500 thrown quite a bit. But what exactly is the S&P 500 and more importantly, should you be investing in it? In this video, we're going to dive deep in the ins and outs of this widely followed index, helping you understand its significance, whether it's the right investment choice for you. The S&P 500, short for Standard & Poor's 500 index, is a stock market index that tracks the performance of 500 largest traded companies in the United States. These companies span a wide range of industries from technology and healthcare to consumer goods and finance, making the S&P 500 a diverse representation of the overall US stock market. One of the key advantages of the S&P 500 is its ability to provide investors with a broad exposure to the American economy. By investing in the S&P 500, you are investing in the cross-section of the country's largest and most influential corporations, which can offer a level of stability and diversification that hard to achieve with individual stock picks. But the S&P 500 isn't just about diversification, it's also known for its impressive long-term performance. Over the past several decades, the index has consistently outperformed many actively managed mutual funds, making it a popular choice for investors looking to grow their wealth over the long haul. Of course, no investment is without its risks, and the S&P 500 is no exception. As with any stock market investment, the value of the index can fluctuate based on the variety of economic and market factors. There's always potential for short-term volatility. However, for investors with a long-term mindset and willingness to ride out the ups and downs, the S&P 500 can be a powerful tool in building a diversified and resilient investment portfolio. Hi guys, welcome to Wealth Weaver Ways. Here we discuss about finance, investment strategies and financial freedom. We are here to help you guys becoming financially free. Make sure to watch the full video so that you can save thousands of dollars and make some investments with that money. I have a bonus tip for you at the end, so make sure to watch the full video. Make sure to subscribe to the channel so we can help you to make millions and help you to gain financial freedom. Let's get straight into the video. Understanding the composition of the S&P 500. The S&P 500 is a stock market index that tracks the performance of the 500 largest traded companies in the United States. The composition of the index is determined by a committee within S&P, the company responsible for creating, calculating, managing various market. So, criteria for inclusion in the S&P 500. The committee evaluates potential companies for inclusion in the S&P 500 based on several key criteria. Market capitalization. Companies must have a minimum market capitalization of 14.5 billion to be eligible for inclusion. Liquidity. The stocks of S&P 500 companies must demonstrate a certain level of liquidity, meaning they are actively traded and can be easily bought and sold. Financial volatility. Potential companies must have a track record of positive earnings and meet specific financial metrics to demonstrate their financial stability and profitability. Sector representation. The committee aims to ensure the S&P 500 provides a balanced representation of different sectors and industries within the US. Corporate governance. Companies included in the S&P 500 are expected to maintain high standards of corporate governance, including transparent financial reporting, ethical business practices, and responsible management. diverse range of industries and sectors. The S&P 500 is designed to be a broad and diverse representation of the US stock market. The index includes companies from wide range of The index includes companies from a wide range of industries and sectors, reflecting the overall composition of the American economy. Some of the key sectors representing in the S&P 500 include technology, healthcare, financials, industries, communication services, and energy, materials, and real estate. This diverse sector representation allows the S&P 500 to serve as a comprehensive benchmark for the performance of the US stock market as a whole, providing investors with exposure to a cross-section of the country's largest and most influential corporations. By understanding the specific criteria for inclusion and the broad range of industries and sectors represented in the S&P 500, investors can gain valuable insights into the composition and significance of this widely followed stock market index. Based on the search results provided here is an explanation and expansion on the key advantages of investing in the S&P 500. Broad market exposure and diversification. The S&P 500 index is designed to provide investors with exposure to a broad cross-section of the US stock market. Impressive long-term performance. The S&P 500 has a long history of strong performance, delivering impressive returns to investors over the long term. Passive investment approach. Investing in the S&P 500 through index funds or ETFs allows for a passive investment approach, which can be advantageous for many investors. By providing broad market exposure, impressive long-term returns, and a cost-effective passive investment approach, the S&P 500 has become a popular choice for investors looking to gain exposure to the US stock market and potentially build wealth over the long term. Based on the research results provided here is an explanation and expansion on the potential risks and considerations. While the S&P 500 index has a long history of strong performance, it is important to understand that investing in the stock market, including S&P 500, carries inherent risks and volatility. Inherent volatility of the stock market investments. The search results highlight that the S&P 500, like the overall US stock market, can experience significant fluctuations in value over the short term. Importance of a long-term investment horizon. To mitigate the impact of short-term volatility, the search results emphasize the importance of adopting a long-term investment approach when investing in the S&P 500. Diversification beyond the S&P 500. While the S&P 500 provides broad exposure to the US stock market, it is important for investors to consider diversifying their portfolio beyond just this index. By understanding the inherent volatility of stock market investments and the importance of adopting a long-term investment horizon, investors can better navigate the potential risks and consideration associated with investing in S&P 500. Additionally, maintaining a diversified portfolio can help mitigate the concentration risks within the index and provide a more balanced approach to building wealth. Now, before we move forward, if you are someone who wants to learn more about growing wealth online, I want to share a free resource. I'm talking about building faceless YouTube channels. Channels where you stay completely behind the scenes but still earn from ads, sponsorships, and affiliate income. Now, here's the thing. Most people who try YouTube, they fail. They upload randomly, they have no strategy, and quit when they don't see results. But the ones who succeed, they follow proven systems. That's why I put together a free training that walks you through the process step by step. You learn how to find topics that get views, how to grow without showing your face, and how to turn your channel into a steady source of income. You can watch it right after this video. It gives you the tools you need to move faster and avoid mistakes that slow most beginners down. It is simple to follow and designed for new creators who want results. I've linked it down below that walks you through how to start and grow your own faceless YouTube channel. This is 100% free to watch, and it's honestly one of the best introductions I've ever seen for anyone who's serious about creating passive income online. Is the S&P 500 right for you? As we've explored through this video, the S&P 500 is a widely followed and respected benchmark for the performance of US stock market. With its broad diversification, impressive long-term returns, and cost-effective investment options, the S&P 500 can be a compelling choice for many investors. However, the decision to invest in the S&P 500 ultimately comes down to your individual investment goals, risk tolerance, and overall financial strategy. When assessing whether the S&P 500 is the right fit for you, consider the following key factors. Investment objectives. What are your primary investment goals? Are you looking for long-term wealth, consistent income? The S&P 500 may be well suited for those seeking broad market exposure and long-term capital appreciation. Risk tolerance. How comfortable are you with inherent volatility of stock market investments? While the S&P 500 has delivered impressive long-term returns, it can experience significant short-term fluctuations. The time horizon. What is your investment time horizon? The S&P 500 is best suited for investors with a long-term mindset, as it can weather market cycles and compound wealth over time. Diversification. How does the S&P 500 fit into your overall investment portfolio? While the index provides broad exposure to the US stock market, it's important to consider diversifying your holdings across other asset classes, sectors, and investment strategies to manage overall portfolio risk. By carefully evaluating these factors and aligning the S&P 500 with your unique financial goals and risk tolerance, you can determine whether this index-based investment approach is the right fit for you. If the S&P 500 does align with your investment objectives, the next step is to explore the various ways to gain exposure to the index, such as through index funds, ETFs. Ultimately, the decision to invest in the S&P 500 is a highly personal one, and it's essential to carefully consider your unique circumstances and financial objectives. By taking the time to understand the index, its benefits, and its potential drawbacks, you can make an informed decision and take the next step in your investment journey. If you like this video, consider watching more videos from our channel and feel free to subscribe, like, share this video. All the links are in the description, and the free training I've talked about is also in the description.